what's the number one expense in operating a dental practice? What do you think it is? Anybody? Everybody's shy. I guess because I'm standing all the way up here. I don't bite, I promise. All right, the common answers I get is payroll, overhead, rent. Those are all excellent answers, right? Dental supplies, lab fees, those are all great answers. But the obvious answer is the one that no one ever even thinks of. It's taxes. We don't think about it, but the single biggest expense in running a dental practice is taxes. And guess what? I have news for you. Even as an individual, the single biggest expense we have is also taxes. So what are we talking about? There's personal income taxes at the highest tax rate. You're paying 37% of every new dollar you earn to the federal government. There's corporate taxes, depending on what type of entity you are. Then you're paying payroll taxes on behalf of your employee as well as yourself. You're paying Social Security tax. That's another 15.3 or 15.6%, somewhere up there. Half paid by the employer, half by the employee. If you're fortunate enough to live within the 5 boroughs in New York City, not only do you pay personal income tax, but you pay New York State and New York City income tax. That's yet another 12%. So if you stop and think about it, basically what ends up happening, you're losing probably close to half of every dollar you make in one form of tax or another. And I didn't even get into sales tax, real estate tax, and the many, many other taxes we end up paying. And of course, my favorite is estate tax. The government then taxes you once again for the act of dying, right? After you die, the government says, they taxed you to death your whole life. Now that you passed away, they're going to ask you, what is your financial net worth, right? You followed all the rules of my book. You're now worth $20, $30 million, hopefully. The government now taxes you based on what your financial net worth is. So if you don't think taxes is a subject you need to pay attention to, you're definitely mistaken, because I don't know of any better way to become financially wealthy than by doing it other than implementing tax-smart strategies. Wherever we could save, whether it's $1 or $100,000, if you're not implementing tax-smart strategies, you're just giving the government a lot more money than is required. Okay, and for those of you that were with me yesterday, I promise you there's only 2 or 3 slides that are redundant. This is also one of them. How many of you in the room work for the government? Anybody? No government employees? I have to confess, I work for the government, and I have to also let you know, all of you work for the government as well. The average American works all day Monday and all day Tuesday for the government, because 2/5 of the average American's income goes to paying taxes. Now, if you were bad enough to be a hardworking, successful dentist, and you're making $300,000, $400,000, $1 million or more a year, guess what? You're working for the government all the way through past lunchtime on Wednesday. So if you think about it, you're really working for the government the first half of the year, right? The first half of the week, I should say. And then the second half of the week, you actually get to keep the rest of that money. So I don't know about you, but when it's put into those type of terms, I don't know about you, but it gets me a little bit angry, especially when I hear politicians saying that people don't pay enough money in taxes, we need to raise taxes. This country was founded under the principle that they're working for the people. Somehow, these career-long politicians, they want more power. How do they get more power? They keep taxing us to death, and then they're using our money to fulfill whatever they want to fulfill within their agenda. So I'm not going to get political here, but I think it's clear how I feel about taxes. I'm sure you all feel the same way too. Okay, so enough with all that good stuff. Let's talk about deductions. So up on the screen, we have a term called ordinary and necessary test. Now, those are not words I just made up. Those words are actually written within the IRS code. What do we mean by that? Well, there's a lot of stuff, there's a judgment call involved as to whether it's tax deductible or not. So certain things, it's black and white, right? Your office rent, is it tax deductible? Of course it is, because you couldn't do dentistry unless you actually had that dental office. So clearly there's going to be certain things, your dental license, malpractice insurance, No one's going to question that. Then there's things all the way to the other side that are not deductible, right? You had an argument with your spouse last night. You went to bed mad. You didn't speak to him or her this morning. You decide you send them a dozen roses overnight. Hopefully make nice by the time you get back home. Is that tax deductible? The answer is no, because it's personal, right? Although, this is where the gray area comes in, right? If your spouse also works for you in your practice, and you send those roses to your spouse in the office, and now they're part of the office, then in that scenario, maybe we can make it tax deductible at that point. The reason I'm giving you these examples is it's not like I could give you a list. This is everything that's deductible. This is everything that's not deductible. I mean, I could give you those lists, but it's that gray area in between. The gray area in between is where you put yourself in a position so that something that otherwise might not be tax deductible could be tax deductible. I'll give you another example of what I'm talking about there. So let's say, how many of you live in the New York area? Okay. And those of you that had to drive a long distance or fly here and stay in a hotel, raise your hand. Okay, great. So those of you that had to drive here, got in a plane, you chose to come to New York, is the entire time you're here just at this lecture? No, right? I would like to think you're enjoying what New York has to offer, going to nice restaurants, maybe a play, maybe you're going to see the Christmas spectacular at Rady City while you're here. But my simple point is, you made it a decision to come to New York and turn this business trip into a quasi-personal trip. So when you plan your dental conventions, your continuing education courses, why not plan a trip to the Bahamas or Hawaii? As long as the primary reason you're going there is for business purposes, that trip becomes tax deductible. So I'm not telling you to do this on your honeymoon because your spouse probably wouldn't appreciate it if you went to a dental convention on your honeymoon. But if you are going away with your spouse to a nice island, let's say the Bahamas, don't just go there and make it all pleasure. Let's say you're there for 5 days. If 3 out of the 5 days, that makes it most of the time, right? The majority of the time. If 3 out of the 5 days you're doing at least something business related, that trip now to the Bahamas becomes tax deductible to you. Furthermore, if your spouse is working for you, you should have her or him on payroll as well, because now not only is your car rental deductible, your hotel stay, your airfare, but also your meals, but now we could do the same with your spouse as well. So this is what I'm talking about. I'm talking about understanding the law and then putting yourself in a position to take advantage of what the law allows, not talking about making up fiction, right? If your spouse never does work in your practice, should you put them on payroll? Absolutely not, because that's illegal, right? That's tax evasion. But I'm saying if you have a spouse, or for that matter, even children that work for you, put them to work, and that opens up the door for even more tax deductions. So in my book, chapter 11 of the book, we talk about everything in this presentation. This is a list of tax deductible items to small business owners, dental practice as well. The list goes on and on. This is just one item. And again, everything I have listed here relates to, it has to be business related. So your cable bill, for example, in your office, that's fully tax deductible. If you work from your home and you're using cable for that purpose, that could become tax deductible too as well. He has a long list of items: health insurance, costs related to your home. We're going to cover a lot of these a little later. The list literally goes on and on. It's quite extensive. Again, in my book, you could go through this as a checklist. I can't tell you how many dentists just assume something is not tax deductible. I had one client 1 year, they came in for the first time, went through a whole list of deductions with them, and I was reviewing their tax return from the previous 3 years, and I noticed there was no health insurance deducted. So right away it was a red flag to me. I go, why does this guy not have health insurance? Clearly that's a necessity, right? It's not something that you should randomly have or not have. Well, as it turns out, I said, why don't you have health insurance? They said, John, I do have health insurance. I've had health insurance for the last 20 years. Well, guess what? He just assumed it was personal because it was health insurance. But health insurance is fully tax deductible. So unless you're having this conversation and this discussion with your tax advisor, your tax preparer, you're going to miss out on some very, very valuable tax deductions. So don't assume something's not deductible because you're getting a benefit out of it. Have that discussion with your tax advisor. Hopefully they're going through checklists with you to make sure you're getting every deduction available to you. Now, two things I want to point out on this tax deductible list. One is at the bottom of the, I guess that's the left side from where I'm looking at it. Restaurant meals are 100% deductible in 2022. So for many years, business meals and entertainment were only 50% tax deductible. About 3 years ago, entertainment became non-deductible at all. So if you have tickets to a Ranger game, Yankees game, and you give those away, not tax deductible. The only exception is if you're doing it primarily for the benefit of your employees, then we categorize that as an employee benefit and not entertainment. But with regards to business meals, those were 50% deductible as long as they were for business purposes. Back in 2001, a law changed and they made it 100% deductible. As long as the business meals were truly business meals and it was with a restaurant, if you're buying something in the corner deli, that doesn't qualify. They were trying to stimulate business for local restaurants throughout the country because they were suffering so much because of COVID. That 100% deductibility was in effect for last year, and it's also in effect through the end of this year. So if you plan to have some business meals sometime in the foreseeable future, squeeze them into this year, so you're going to get a full 100% business deduction for it. Starting next year, that goes back to only 50%. Another new item, have all of you heard of the PTET program? Anybody know what that is? No? We're going to cover that in great detail. That's also one of the new tax laws that came into effect in 2021. And you probably heard commercials about it and probably ignored it, and I'm happy you ignored those commercials. I'm going to tell you how it works, and it's an extraordinarily good thing. But I'll get into that later, but my simple point is most business taxes are also tax deductible. If you pay any taxes through the pass-through entity tax program, those are all fully tax deductible to you as well as your business. So that's the short list of what is tax deductible. This is a list of non-deductible expenses. So guess what? No surprise here. If you engage in illegal activities, the government will not give you a tax deduction. So if you're paying bribes, let's say you're running late and you work at the local hospital and you park at a fire hydrant, you get a ticket. That parking ticket, not tax deductible because you broke the law. Those type of things are obviously very, very common sense, I would think. So bottom line is anything that is contrary to the law, you're not going to get a tax break for it. So you can look at the list here. I'm not going to go through all of them. Political contributions are not tax deductible. Believe it or not, if you give business gifts, it's limited to no more than $25 per person. Most people think it's ridiculous because how do you buy a nice gift for more than $25 for your staff or referral sources? Oh my God, I can't believe you said that. This is right there. It works. Thank you for that. All right, so you want to have tax deductible gifts, but there's a limit to what you can do with that. If you give a $500 gift, only $25 of that is going to be tax deductible to you. So my favorite one on this list is personal expenses. So one of the biggest challenges when you also help dentists with their accounting records is going through their credit card statements, going through their bank statements, trying to figure out what they're paying for. And I have to tell you, and I think you guys can relate to this because even in dentistry, you have some patients that are super aggressive, some are super conservative. Same is true in the accounting industry as well. So I have clients who are trying to write off everything. Their daughter's wedding, they're trying to write off, you name it, they're trying to write it off. That's not the way to work, right? Because that is considered tax evasion. You get yourself in a lot of trouble for that stuff. So I'm going to give you a quick example. So going back, it was probably 12, 15 years ago. One of the accountants that was working for me came in and said, John, I'm talking to Dr. Jones, and Dr. Jones is insisting that this $25 payment he made to B&A Jewelers was a business expense. But to me, he said, it doesn't seem legitimate. So of course, he wasn't cooperating, so I picked up the phone, called Dr. Jones, and I said, so explain to me what that $25,000 item you bought and tell me why it was essential to your practice. So his response to me was, well, John, to me, the most important thing I could do as a dentist is see my patients on time, every time, without exception, because customer service, right? Customer service, client service is the most important thing in my practice. I have to tell you, I had to think about that for a minute. I scratched my head, and I said, what exactly did you buy? I bought a Rolex watch. I said, I don't think that's going to fly, right? Clearly, it's not ordinary, it's not necessary, but my point is some people try to push the envelope, and you don't want to push the envelope in those directions because that will get you in trouble. You know, if you could buy a nice wall clock for about $25 that tells time pretty close, that's good enough, right? But I could give you hundreds of examples like that. Those are the extremely aggressive dentists. Then I have dentists on the other side that are super paranoid, and they're cheating themselves of tax-deductible expenses. They'll come in and they say, well, I did pay for this, but I don't have the receipt. I can't find it. Don't worry about that. If you legitimately spent the money, you got to go for it and deduct those items.